Hello and welcome to this specialized training module on the information systems auditing process. Today, we are moving beyond the fieldwork and diving deep into the critical phase of audit execution with a specific lens on reporting and communication techniques. You might be the best technical auditor in the world, but if you cannot communicate your findings effectively, the value of your work is lost. We will explore how to translate raw data into actionable insights, manage the delicate exit interview, craft the final report, and ensure issues are actually resolved through follow-up. Let's get started. Let's begin by positioning communication within the audit execution phase. Execution isn't just about running scripts or checking configurations. It involves constant interaction. As you see here, the core objective is to provide assurance, but that assurance must be understood by the business. The why is simple. The effectiveness of your entire audit hinges on how well you convey your results. If you find a critical vulnerability but explain it poorly, management might ignore it. A golden rule we follow is no surprises. Your communication strategy must ensure that by the time the final report lands, management is already aware of the issues. We don't hide findings until the end. We maintain an ongoing dialogue. Looking at the diagram, we see where we fit in the big picture. We move from planning into execution. Within execution, we are gathering evidence, evaluating controls, and validating results. But notice the central node, continuous communication. This isn't a linear step that happens only at the end. It feeds into every part of execution. Whether you are validating a specific test result or evaluating a control failure, you are communicating with the auditee to ensure facts are correct before we ever reach the formal reporting phase. Before we write a single word of the final report, we must validate our findings. This is the bridge between data and audit finding. We use data analytics and evidence collection to find anomalies, but an anomaly isn't necessarily a finding yet. You must validate the facts with the auditee to ensure you haven't misunderstood a process. Ask yourself, is this material? Materiality in an IS audit is when a deficiency makes serious errors or illegal acts possible. If it's a minor glitch, it might not belong in the executive report. We document the who, what, when, where, and why for every exception. If the auditee disagrees, we record their perspective, but the auditor must ultimately decide based on evidence. This FLW chart illustrates the validation logic. We start with raw evidence. We ask, is this an exception? If no, we document compliance. If yes, we move to the crucial step, validate with the auditee. We don't just assume we are right. Once facts are agreed upon, we apply the materiality test. Is this a significant risk? If yes, it becomes a draft finding for the formal report. If it's immaterial, we might just leave it as a minor note for management, keeping the final report focused on high-risk items. The exit interview or closing meeting is perhaps the most important communication event in the audit. Its primary purpose is not just to read a list of errors, but to ensure facts are presented correctly. We want to eliminate any remaining misunderstandings. Who attends? Usually audit management and the key control owners. This is your chance to discuss recommendations and, crucially, to discuss implementation dates for fixing issues. A successful exit interview means that when the final report is issued, the auditee is not shocked or defensive. They are aligned with you on the path forward. It turns the audit from a policing action into a value-added exercise. Here's how the interaction flows during the exit interview. The auditor presents the draft findings first. The auditee then has the opportunity to clarify or challenge the facts. Maybe we missed a compensating control. The auditor adjusts the findings if evidence supports it. Then we move to the constructive phase. The auditee agrees on corrective action and, most importantly, commits to a final implementation date. This sequence ensures accountability. Now we move to the formal audit report. This is the enduring record of your work. It must identify the organization, recipients, and any restrictions on circulation. Standard 1401 dictates that we must clearly state the scope, objectives, and the period coverage. You cannot just say, it failed. A good finding includes the criteria, what should be, the condition, what is, the cause, and the effect. We also must be honest about limitations. If we couldn't test something, we state that reservation clearly. Finally, the report is signed and dated to formally attest to the results. This structure ensures the report stands up to scrutiny, whether by the board or external regulators. Think of the audit report as a container with specific mandatory compartments. As shown here, it must contain the scope and objectives so readers know what was looked at. It needs the period of coverage. Audits are historical. The executive summary is for high-level stakeholders. The core is the findings and recommendations section. Crucially, it must include the management response, their promise to fix it, and finally, the auditor's signature, which finalizes the engagement. Sometimes you find more than just errors. You find irregularities or illegal acts. This requires a specific communication protocol. If you suspect fraud, you must report it to a level of management above the person involved. If senior management is involved, you go directly to the audit committee or board. Note that materiality works differently here. Even a small fraud is material if it signals a breakdown in management integrity. You must maintain professional skepticism. Never accuse, simply present the evidence. And regarding external reporting to regulators, always consult legal counsel first to understand your obligations and protections. This flow shows the escalation path for sensitive findings. Once we detect an irregularity, we assess involvement. If it's staff level, we report to management. However, if it's management level, we must bypass them and report to the audit committee or board. From there, the critical step is to consult legal counsel before taking any further action, ensuring the auditor and organization are protected. A report without a management response is incomplete. Standard 1401 requires us to include management's proposed actions. We need 3 specific things: what they will do, who will do it, and when it will be done. Sometimes management disagrees. If they do, we can include their view in the report, but if the auditor believes the risk is still significant, we must state that. Management might also choose to simply accept the risk. If they do, especially for high risks, we must ensure this decision is reported up to the board or audit committee. We always prefer these responses in writing to ensure a clear record of commitment. Management generally responds in one of 3 ways. Most often, as shown in the largest slice, they agree to remediate or fix the issue. Sometimes they cannot fix it directly, so they implement a mitigating or compensating control. Finally, as the smaller slice shows, they may choose to accept the risk. As auditors, our job is to ensure whichever slice they choose is documented and approved by the appropriate level of authority. The audit isn't over when the report is issued. Standard 1402 mandates follow-up activities. This is where we verify if management actually did what they promised. The timing depends on high-risk findings get checked first and fast. Crucially, we cannot just accept a memo saying it's fixed. We need to verify the evidence. If they implemented a new firewall rule, we check the config again. We then report the status of these remedial actions to the audit committee, keeping them informed of what remains open and what has been closed. If management defers action, we must assess if that delay creates unacceptable exposure. This Gantt chart visualizes the follow-up logic. Once the report is issued, the clock starts. High-risk fixes are critical and happen immediately. We schedule our verification right after their target date. Medium risks might have a longer timeline. Notice the milestone at the end, reporting status to the board. This cycle ensures that the audit provides lasting value by enforcing the timeline we agreed upon in the exit interview. Finally, let's discuss the how. And as auditor needs more than technical skills. They need soft skills like facilitation and negotiation. You will often find yourself negotiating the rating of a finding or the timeline for a fix. Active listening is vital during interviews to ensure you aren't missing context. When conflict arises, and it will, you must remain objective and focus on the evidence, not personalities. Your writing must be clear and concise. Executives don't have time for jargon. Ultimately, you are building a relationship of trust. You want the auditee to view you not as a policeman, but as a partner in risk reduction, all while maintaining your professional independence. We wrap up with this mind map of audit communication. It breaks down into 3 branches. Written communication must be clear and objective. The report is your legacy. Verbal skills drive the fieldwork. Listening and negotiating are daily tasks, and the interpersonal branch underpins it all, building trust and professionalism while strictly maintaining independence. Mastering these areas ensures your technical work translates into business value.